The broad market is higher as strong earnings continue. Will that be the case after the reports on Wednesday, October 29th? We shall see. So I'm going to dive into a bunch of S&P 500 stocks reporting earnings on that day, looking at price action, market timing, and momentum, because I'm human ready and that's what I do. So let's go ahead and dive in. I've got these loaded up on my wealth charts, and I'm going to probably focus in on more popular names, but I'll definitely comment if I see something else jump out. So let's start with Centene, all right? And thanks to your feedback, I've tightened up my watch list window and given us more chart history. So let's go ahead and look at how it has been behaving over the past year or so. So it's in a downtrend and had this massive gap. Now it is attempting to stabilize. Now the hope here is that it stays above the low from September 22nd around 31.65. If it does, I think this stock has a chance for another little pop higher, a return to the $40 area. If not, on its way back towards its recent lows. CVS is rocking and rolling higher. Now it has recently had a little bit of a pause, and that gives us room to see a more healthy pullback ahead of resuming higher. But overall, the trend is higher on this stock, and I think even with earnings should remain that case. Of course, you got to watch the price action. I'm just sharing what I'm seeing ahead of the report. Now, the most important support on this is from September 8th at 69.60, okay? It's a little bit away from where we are now, but it is corresponding with the most recent significant trough on the RSI Power Zones, my favorite momentum indicator. So there's room for things to wiggle down, but if it holds that September 8th low, might be a buying opportunity. All right, now we've got Caterpillar. Beautiful movement into the bull resistance power zone multiple times. Bull support holds at this consolidation. So I think we're in a position to continue to edge higher. It may require a little bit more of a sideways action to work off recent overbought conditions, okay? But I think that CAT has some room to run to the upside, up towards 560. Fiserv is not looking so hot. It has been dominated by the bear zones since April of this year, and it is edging back up towards an old bottom from August 7th at 131.06 with the RSI Power Zones returning to bear resistance. So I don't think there's a lot more room to run to the upside here, maybe a few bucks, then more likely to be an opportunity to go short versus long. Verizon, ticker VZ. As you can see, it's been in a massive range, essentially, that has been supported by the December 2023 low. It was revisited in January of this year, and now it's trying to be tested again. So we've got a near-term downtrend in place. The RSI Power Zones have been pushing down to bear support. And yeah, it looks like there's still a little bit more downside to go if we stay beneath the high from October 20th. Okay, that's the key tell here as to whether we're going to test further down into this range low or have another run up back towards $47. Boeing. All right, ticker BA. We have got a beautiful consolidation that unfolded that was just kind of working off time on the chart as the RSI Power Zones worked off not just back to the bull support power zone, but even lower. So right now, while we stay above the low from June 13th at 195.28, I think this is in a position to ramp up and continue higher. This could be a position building opportunity on Boeing. And in the big picture, I think headed towards 260 over the next several months. All right, now we get into a little bit of a tech suite. We've got Google, GOOGL. Remember, there are the two shares, GOOG and the one with the L. So focusing on the ticker with the L, we've got a beautiful bounce that happened October 10th after the RSI revisited the bull support power zone. And that was very similar to what happened back in June, which was the beginning of a nice run up. So this stock has room to run, and I'm going to go to the weekly chart for a moment to see if we have any moves that are kind of healthy to do a forecast. So the thing about forecasting is I don't like doing it on steep moves. It's technically possible. Let's just say that I don't think $300 is far off. We'll leave it at that and revisit the rest during monthly group coaching. All right, for Meta, I've stayed on the weekly chart so you can see how it recently turned higher from the bull support power zone, even though we're in this broader consolidation. So going back to the daily chart, we're in a good position for Meta to resume its bigger trek higher, but it's got to get through that September 19th range and the high at 790.80. If it doesn't do that, or if it turns lower beneath the low from October 24th, at 731.15, then we might see a return to the $700 area. Okay, now on to Chipotle. Ticker CMG. All right, not looking so healthy. Had its nice, beautiful peak back in December of 2024. Tried to pick things back up in July of this year and could not do it. So where we are right now, this looks like it may have a little more downside to go. So the low from October 10th at 39.81 is what's really shaping the situation. If we can stay above that, then maybe there's a bit of a pop up towards the high from August 18th at 44.27. Okay? But if we get below that October 10th low, it's not looking hot. However, I don't think it's like game over for Chipotle. I just think it's most likely to head towards the $35 a share area. That's my take on some of the bigger names reporting earnings on Wednesday, October 29th. If you found value in this video, please go ahead and hit that like button, and I'll catch you in the next video.